Welcome, ladies and gentlemen, FOMC Live. Welcome, guys. So, Powell, he's going to be talking very shortly, and the markets are going to be getting into some chaos. Listen, we already know that the Fed is going to keep the interest rates on hold, okay? But what we're looking for is what Powell is going to reveal about the policies that are being pushed on by Trump. Trump is going to be talking to Zelensky, and it's all systems go. Now, he said he was going to have the day off and not really say much, but he did go on to Truth Social talking about Hamas and what have you. So it's going to be interesting to see if he actually does start talking during the FOMC or puts out a post which can really rock the market. So what are we looking for? Well, guys, tonight we're just going to be looking for the press conference. And what are we going to do? Well, we're just going to scour the market and we're going to look for potential opportunities. We're going to break down a little bit of order flow. We're going to try and understand, is Bitcoin getting ready to do the unthinkable? Are we going to get that great news from Powell? But like I said, there's nothing new that's going to be said. We know he's going to be holding the interest rates. We know it's all going to be on a wait and see mode in the sense where we're waiting for data. Euro's taking a shoe bag to the downside. Dollar's shooting up. Why? Because investors are now aware that we're going to have interest rates higher for longer. How much more higher and how much more longer? Well, that's going to be revealed in tonight's live stream. So if you are here getting ready with your popcorn and your coffees and your shots on how many times Powell is going to be coughing and sneezing and correcting himself. I mean, this live, it's the biggest live. And of course, it's the funniest live for me as well, because I just pay attention to what Powell is doing and his unbotheredness about most of the questions that get fired to him. So it's going to be an eventful evening, guys. So if you are in what would appear to be profits, just make sure you're taking something off the table just in case it gets a little bit chaotic, ladies and gentlemen. So getting into it all, let's roll with the program. So stocks get a boost before Fed and dollar is climbing. We know they're going to be holding the interest rates. And Fed's updated quarterly economic forecasts will be released. And in the calendar itself, this is how it's going to go. So we've got the federal funds rate that's going to be released very, very shortly. Back to back with that, we've got economic projections and, of course, the statement. Now, the projections themselves are going to reveal whether or not the Fed thinks the economy is going to be doing well in the future. Okay, so that's something that we need to pay attention to. But more importantly, Powell, I'm not sure if the projections themselves are going to factor in the tariffs. But during the press conference, we're going to be looking to see if they are going to ask that question and say, what's your opinion on these tariffs? And do you think that it's going to be a problem for us in the future? Okay, so going into it all, let's just have a look at where we are. Euro has taken quite a slump to the downside and strength is clear as day, getting very, very busy. Coming into that 800 EMA right there. Quickly going over into Bitcoin, it's pulling back quite a bit as well. Just looking at the way things are going in the markets, it's like this is natural. When you see price floating upwards, usually just before news, it always ends up pulling back ever so slightly. And then when we get into the news, that's when you're going to start seeing all of price action just going a little bit crazy across the board. And I will say, I didn't talk about this earlier on, but of course, the court case has now been and dusted. It's like, that's it now. We're all happy days with XRP. And XRP really didn't do anything. It just made a move up to where it was last week in the same spot that we were complaining about it not moving from. So is that your response, market? Is that really your response? The court case is done and that's all we got. We got back to where we were before. Never mind. What you expect? It's XRP formation, ladies and gentlemen. That's the story. Having a look at everything else across the board. So Euro, it's trying to come away from this psychological range and it's just given back most of what it's done this week. And of course, this is a very key area for the Euro. Going into the dollar dominance right now, we can see it is climbing up and that low right there has established itself and dollar was effectively inside of a very key area. Purchasing power of the dollar now is at 3.5%. So that's very, very good. Going into the volatility index, you can see the volatility index is coming in at the lows at 19.8. And then, of course, the NASDAQ today, she's done relatively well, given that it's trading up to come down sideways. But we're going to get the flavor very, very shortly, ladies and gentlemen. Okay, so anyone have any questions? So far, so good. It's going to be an interesting night tonight. I mean, I have got XO charts getting ready. I mean, I'm just going to have a look at the order flow on Bitcoin right now. So just pull that up for you. So here we are. So this is Bitcoin's order flow, where we're going to try and establish if Bitcoin can retain itself from these areas and start working back up towards the 85 plus. So we're going to have that on during the actual press conference itself. Going into the order flow, you can see that we've had quite a few traders. I mean, 8,359 traders were liquidated in the past hour. Having a look at the order flow, just going and zooming in, you can see that we got some bids coming into play. And as I said earlier on in the live, we want to see these orders getting cancelled and moving up. As long as we can see them moving these orders up, then that means that guys are like, okay, there is an expectation that they're not going to be marking prices lower. So we're probably going to have to get our orders filled closer into where price is currently sat at. Okay, looking at the liquidations, so you can see lots of traders are being liquidated, and we've got quite a cluster over here at 86. The ideal scenario would be that if the Fed says, yeah, we're going to cut the interest rates, okay, and we're going to give you your 3 rate cuts, but the market is pricing in now 2, but that's where it gets a little bit interesting. But if the NASDAQ itself can reclaim the 20,000, then all of this move to the downside, as you're seeing on the daily time frame, is effectively a good opportunity to be buying just effectively buying these dips and then selling the rallies. Because if the bigger picture is suggesting that we're going into a little bit of a market correction, because this is market correction territory, then of course the market will then rally prices higher, they will start to sell, and then it will then work its way back down again. Okay. Why is the DAX strong? Germany printed 1.5 trillion euro. Yeah, so there's that again. Any questions, ladies and gentlemen? Tino, rate cuts usually mean something in the economy is broken, right? Not necessarily. It doesn't mean that there's something broken in the economy. It means that they need to release liquidity. Because if there's too much tightening happening in the marketplace and it's preventing the economy from expanding, then they're going to have to release liquidity back into the market. And they do that by decreasing the interest rates. Okay, it's when they start increasing interest rates when things get a little bit tricky, because then they have to control inflation. So they do that by increasing the interest rates so that people aren't as busy trying to borrow money. Because if you've got really high rates, then you're not going to be taking on financial products. And banks are going to be having to put a markup on those products, which is forcing the consumer to spend more. No one wants to spend more. Okay, so that's something that you need to take into consideration. Why is Bitcoin falling pretty fast? It's not really falling pretty fast, ladies and gentlemen. Look, I mean, it's a very, very small retrace. Come on, it's been going up non-stop. Each of these is a candlestick that has been going up non-stop for a couple of few hours now. So you can't complain on a little bit of a retrace. But again, retail is the reason why Bitcoin is moving up right now. They're getting excited about things. And the actual data is going to be coming out very, very shortly. So just make sure that if you are in any profits, you're taking something off the table. Yeah, the music is going to come back. Don't worry, man. Don't worry. Tino, for 2025, I'm heavy invested in quantum robotic. What do you think of that? I do think quantum is going to be absolutely smashing. I mean, today, NVIDIA has been talking, and Jensen, he's been talking quite a bit, and NVIDIA's seen a nice, decent move to the upside today. It's up 2.3%. I'd expect them to try and come back into this red vector candle recovery. I'm looking for NVIDIA to get back to 134. And as long as the market does actually come to the idea of saying, okay, maybe now's the time to start buying the dip, but then selling the rallies, then that will give us the idea of movement to the upside, especially for cryptocurrency as well. I mean, looking at the big boys coming into it, you got Tesla right now, it's up 4%. Doesn't look like it's up 4%, but it is up 4% for the day. Microsoft is only up 0.51. And of course, you got Amazon. It's trading negatively, but only down 0.2%, 0.02%. And then, of course, you got MicroStrategy, which is pulling back ever so slightly, but it is still trading positive for the day. So it's going to be very interesting to see how that plays out. Now, just quickly going into the options chain itself to see what's coming in before the actual press conference. I'm just looking at the options unusual trades right now to see if we've got any plays on the S&P and the NASDAQ, or the QQQ and the SPX. Not really seeing any positions being played on that right now. Just go into real time and have a look. Here we go. So yeah, we got a couple of buy calls on QQQ, very small buy. You can see, look how light the board is. So look at this. Can you see how light? There's a light green on the chart, right? It's light green, and you get this dark red. Okay, you can see that volume isn't coming into the market because they're waiting to see what Powell has to say about the economy. We know that the economy is strong still, The labor market is still strong, even though we are seeing a little bit of a contraction in the data in the sense where there's more people claiming benefit. Well, we need to see that trend continue. But the main factor tonight is inflation. We want to know what Powell's going to say about the fact that inflation has come back up again. And how is it also going to be an impact on these tariffs? Will the tariffs cause the inflation to go back up again? If we go back up again to like 3.1, 3.2, then we ain't going to be getting no rate cuts, ladies and gentlemen. And that's what the market is looking for this evening. Okay, cool. Let's just go back into price action. Bitcoin's pulling back ever so slightly. Yo, buddy, I'm suing Coinbase for 30 million for unfollowing me, unallowing me to sell. That's a bit mad. My prediction is Powell walks out and says, good afternoon, coughs, and the market dumps. That is probably what will happen. Money M2 charts indicate maybe next week for Bitcoin. Look, the money supply is coming into play, ladies and gentlemen, but the way Bitcoin moves is it's predominantly, it's all on speculation. Look, all of these liquidation points right here, okay? This is liquidity that has been given in the marketplace. Open interest is up. People are exploiting leverage. So just make sure that you're aware that if you're in a position and you're witnessing price going down to what could be an area where there's lots of liquidations, if your liquidation is in that area and you're seeing price moving towards it, get out. Don't wait for your liquidation to get hit. Don't let your stop loss be your liquidation point. You know, so you've got to really protect yourself. Now, going into the ETF itself, have we had any updates on that? So it doesn't look like they're doing much, man. Look, what's going on here? There's not really been any purchases on the ETF. Here we go. Right, so we've got a lot of, here we go. BlackRock's been buying. Okay, so we've got 369, 1,200 Bitcoin has been picked up by BlackRock, and that is quite evident given that we are into FOMC. So what else have they done? Yeah, so we got another 200 right there. So that's decent. All right. You got, who was that? ARK Investors picked up 500 Bitcoin. Well, actually transferred it to another wallet, but yeah, it looks like the ETF is doing relatively well. Just quickly going into the order flows itself on the ETF, just have a look. Have we got anything? So yesterday we did see some outflows, but nothing too concerning. If we see the outflows slowing down, then that's good news for us. We really need to see more inflows because we've had quite a significant sell-off in regards to the outflows on the ETF. Okay, so let's quickly go back in. Bitcoin's still coming back down. Well, we are 14 more minutes, ladies and gentlemen. Any questions? Tina, what do you think of March options expiry? The markets are unable to move up until after the expiration. Well, that expiration is for around $11 billion. Okay. Now, it ideally needs to stay above 70K. That's what needs to happen for that option, if I'm correct with that. But we just recently had the last one for about 2.5 billion. Bitcoin really didn't do anything. But that $11 billion expiration is going to be a market mover, in my opinion. So tonight, if it is in favor for the calls, then Bitcoin just really needs to surpass the 85 zone to make those calls be in profit and be in the money. Okay, so it's very important that we actually see that going into tonight. Gold, buy limit 3,000 in case of spike at the news, or sell limit 4,000. I mean, listen, man, gold has been doing wonderful. It's doing very well right now and holding out. It's holding this green vector candle block. And if you are new to this live stream and you don't know what I'm talking about in reference to these vector candles, please go and take the Traders Reality free course. It's all about the hybrid system, and it will give you everything and the foundation that you need to understand the hybrid system. It only takes an hour and 10 minutes, and it's short videos where I can just plow through it and have an understanding on what to expect with the hybrid system and how to use it in principle as well. Okay. And then, of course, if you want to become a platinum member, you get access to these PDFs. These PDFs are all checklists about the hybrid system. And one that we're focusing primarily every single day is checklist 8, which is the Brinks box strategy, which Brinks box strategy is the most important time in the marketplace because it's when both London and New York are open at the same time. And there's strategies behind the Brinks box that you can utilize to exploit potential movements in crypto, in the Forex markets, in the indices, everything. Primarily works great with the indices like NASDAQ, S&P. And cryptocurrency is also up there with the benefit. Okay. So if you want to check that out, go check out tradersreality.com. It's in the description of this live stream, ladies and gentlemen. Okay. Now, I just want to have a look at where we are with the VIX. The VIX seems to be rising, and that's not good. We don't want the VIX to rise. We want the VIX to go down. All right. We're going into 11 minutes left, ladies and gentlemen. Tina, do you think that the BIT bonds are a great idea to pay off the US national debt. I think, listen, how they achieve paying the national debt off? Well, if they're going to use Bitcoin, for example, well, they need to start buying the Bitcoin. And I'm not hearing anything about them buying the Bitcoin, and that's what we need to take in consideration. Tino, increasing or cutting, which one does help the government make more money? Always here, buddy. Mad love to you. All right, listen, if they increase, look, the thing is you've got to take into consideration is the balance sheet for the Federal Reserve, right? If they're offloading their balance sheet, that means they're taking off assets. They're trying to raise capital. When they start adding to the balance sheet, then that makes life even better. We want them to add to the balance sheet. We want them to put money to work, okay? But when you've got this story over here with the yields, the bonds market is trading sideways, okay? Investors are in wait and see. Look at it. The bonds aren't doing anything. All right, it's choppy. And that's why you've got a lot of people sat in the ETFs. ETFs has around $7 trillion worth of capital in there. And the reason why it's there is because investors are effectively concerned about where they're going to be putting their money. And when they sit in ETFs, it means that they're trying to diversify themselves. All right. Now, that's bond ETF, stock ETF, and all of that stuff. ETFs usually aren't that volatile. And that makes sense with the fact that the bonds market is trading sideways as well. Okay, because people are trying to diversify and work out what is the next protocol. What are we going to do with our money now? You can go over and look at these sort of charts right here, which is the CME rate swap calculator. That pretty much shows you what investors are being offered in terms of holding euros or not. That right now is coming in at 1.91%. Looking at the euro, still taking a bit of a tumble to the downside, but nonetheless, they can lock in a decent rate on the euro and on the yen. But tonight, when we find out what the Fed's going to do with interest rates in the future, because we know the interest rates are going to be held, so we don't need to react really to the interest rates, okay? But what they decide to do with the interest rates in the future is going to dictate whether or not the bonds market is going to go up, whether or not the dollar is going to go down, whether or not oil is going to come back down, whether or not the NASDAQ is going to be moving up or down. And it's all about capital distribution, okay? So regardless of them increasing or decreasing, what we need to do is think about what their expectation is of the future. Because if they know what the future's looking like based on the data, investors will act now and they will start putting their money into risk on or risk off assets, okay? Cool. Anything else? Your best mate from Peckham. How you doing, guys? What's good? Guys, what's with the golden shoes? Those are Trump shoes, ladies and gentlemen. Those are the Trump shoes that were given to me by a member in the channel. Mad love to you, bro. Mad love to you. My God, my nose. I'm about to sneeze. Anyways, would the Fed care more about inflation or the growth at this stage? Well, what you've got to understand, guys, the Fed primarily is concerned about the economy. And if they are happy with the economy, they don't have to worry about increasing, decreasing interest rates. Why? Because the economy is sustaining itself. Okay? Before, when we had the interest rates being moved up and then we peaked at 5%, up until that point, consumer sentiment was very optimistic. They were happy to absorb the high inflation. And that's what was going on. The market was like, hold on a second, we're getting good results from earnings. We're getting all sorts of fun and games happening in the marketplace. We don't care if the Fed is increasing the interest rates. We don't care if inflation is up. The markets just keep going up. And that installs sentiment to people to think, okay, I don't want to miss out on anything. And then you get nearly $6-7 trillion worth of capital from retailers plowing into the stock market. Okay. So it's going to be interesting to see what their expectations are in tonight's FOMC, guys. XRP is going to the moon, probably, yeah. Tell everyone to bloody click the like button. Well, it would be nice if you could click the like button, ladies and gentlemen, to get into the flavor of it. What time are we on? All right, we got another 8 more minutes until the market actually comes into play with the FOMC. Does the US economy matter more than the global economy? Because places like the UK are struggling. Whatever happens in the Eurozone and in the UK usually happens in the US, all right? But primarily, it's all about the US. That's the crazy thing about it. Your gold is bought in dollars. Your oil is bought in dollars. Coffee, wheat, soya, everything is traded in dollars, okay? And the main commodity that is traded in dollars is oil. That's why you've got BRICS trying to come away from the petrodollar standard. So if the US is struggling, in essence, the world is struggling. But If the US doesn't go into a recession and the UK goes into a recession, no problem. That's how the US is. They don't care. As long as our economy is doing well, then we don't need to be worrying about anything else. That's why everyone's having such a mad impact on these tariffs, because everyone is rinsing off the US dollar. And Trump is fully aware of that. And he puts that into practice with these taxes, tariffs, whatever you want to call them. Okay. Anything else, ladies and gentlemen? What do you think about a bad recession? What do you think a bad recession would do to gold and Bitcoin? Okay. A bad recession would force, to be honest with you, the day they declare a recession, gold will drop. Gold will drop. Why? If you go over to gold right now, you can see that prior to the subprime mortgage crisis, so if I just put it into perspective, okay? We go back to the subprime mortgage crisis back in 2007, 2008, you can see that gold itself had made a very significant move to the upside. Where is it? Here we go. So this was the build-up in 2007 to the subprime mortgage crisis. Subprime mortgage crisis comes into play in around March time. Gold takes a tumble to the downside. They had effectively had completed their hedge, okay? That's where it was. So they were preparing gold. They knew that things weren't working properly. And then gold then made the rally to the upside. All investors were running into gold, safe haven, safe haven. When you see gold being mentioned in the articles, in the news, you know that retail is going into that, but hedge fund managers are selling. They are actively selling their gold as prices are going higher. So when we look at gold right now, you can then say to yourself, okay, then are we in the next hedging event? Yes, we are, because gold, look at it, it's moving up. So hedge fund managers are selling their gold, okay, as in the gold spot positions. That means that, God forbid, if they turn around and say that we have a recession, gold will come back down because the hedge has been done. They've covered themselves. So now anything that happens from now until whenever that moment is when they declare there could be a recession, gold will effectively roll over, and then it will then prepare them for the next event that they will need to hedge. Remember, they buy when it drops and they sell when it rises. You go to the sentiment chart over here. Oh, let's go to that a second. Let's just go to the smart money, dumb money confidence chart. You can see over here that the smart money logic is that we are right now at the top side of that, where we got a reading of just over, just above the 0.74 region, which tells us that smart money has been buying as prices have been going down. And when it hits these extremes, it tells us that they are getting ready, maybe at a certain point, to start selling, and they will sell as prices move up. So that's what's going on here with gold. They consolidated, they built the hedge, and then they've now sold out on the hedge and covered themselves on that risk. Okay, cool. Anything else? You don't care about the rates, you're only interested in Gina. Fair enough. Gina from Financial Times. Happy days. All right, then quickly now what we got. Here we go. All right, ladies and gentlemen, we've got 4 minutes until we actually see that flavor, ladies and gentlemen. So again, let's get the likes up. 500 likes and only 2,685 people. What is going on? Why am I the only one that doesn't think Bitcoin can fall below pre-election day levels? It's never happened before. Ain't going lower than 77,000. Okay, then, cool. Hey, Tino, me or a lot of stock are forming cup with handles. In my opinion, market goes up until April with Euro tariff. What do you think? Thank you. Look, we haven't had any tariffs come into play just yet. When the tariffs do come into effect, you won't see the impact of tariffs straight away. And that's the key thing that we're looking for tonight from Powell. His opinion on where the Fed thinks the markets or the economy is going to be in regards to the tariffs. Because remember, the market is not the economy and the economy is not the market. They're completely two separate things. If the markets are pumping but your economy is dead, then what does it tell you? It just tells you that the market is pumping. It's not a representation of the actual economy itself. Because we had struggles before, yet the market still continued to go up. Look what was going on with the subprime mortgage crisis. Everything was going to the bin, but the markets kept on going up. Oil trading $149 a barrel, gold trading higher, and it was absolutely crazy. And it's always at all-time highs when you get the biggest corrections. Not to say that Bitcoin, it's close to its all-time high-ish by 20 grand or so, but it's always at the all-time highs where everyone will make the biggest reaction, okay? So just take that into consideration when you are looking to invest. I don't think now's the time to invest in stock until we start seeing accumulation days occurring on the NASDAQ and the S&P. We haven't had a day of positive volume coming into action on the NASDAQ. So until we start seeing at least 3 days of buying pressure, then the fourth day, and if it follows through on the fourth day, then we'll see prices expanding to the upside, and then you'll get yourself your little rally or you move to the upside. Okay, then. Mad love to you, M16G. Here we go. 1 minute to go, ladies and gentlemen. Well, yeah, just a couple of minutes to go. No, literally 1 minute to go before we get the Federal Reserve's projections. Let's just see what Bloomberg is going to be saying about that. Actually, let's just go here and let's see what they have to say about it. Yeah, Bank of Japan, man. They're going to be bringing some very interesting flavor. I'm telling you now. Tino, have you had an interview with Crypto Prince? Oh, yeah, we'll sort something out, whatever. We'll try and find something. We'll speak to many people. Get ready to be kicked in the nuts by Powell. Now we'll just keep an eye out on what's going on across the board. Okay, Powell speaking in 30 minutes. Yes. Listen, we're going to get a reaction very, very shortly on the on the actual projections and the FOMC statement. All right, so we're going to keep an eye out on price for a split second. All right, just keep an eye out on Bitcoin. I'm going to put this over here. We're currently trading in value areas. Here we go. We're getting some action. Here we go. Euro's making a little bit of a move up and down. Here we go. Euro's spiking up, guys. What are they saying? Bitcoin's moving up nicely. That is a big move. I'm not even knowing what they're going to be saying about the FOMC, but that tells me that we're going to get the rate cuts. We need to see proof. Euro's making a very significant move to the upside right now. Bitcoin's making a nice move. What are they saying in those projections is obviously good news. If the euro's moving up so strongly, dollar right now is trading a bit negative, still at 3% purchasing power, but euro's doing a very nice thing to the upside. Bitcoin needs to sustain itself. All right, then here we go. Let's just put it into perspective. The NASDAQ itself is going absolutely crazy. Here's the NASDAQ. It's moving quite sharply as well. Euro's just pulling back ever so slightly on spot. But NASDAQ, it needs to clear 20,000 for us to make this assumption that it's good news. Okay, so that's the NASDAQ right there. And we ain't even got the actual press conference. So, oh man, long live Powell. All right, so Bitcoin's not really doing too much. Let's just quickly go over and have a look at what they're saying in terms of the news over here. Here we go. So no one's actually saying anything. Nothing's coming out. Give it a split second. No change. We know the no change. That's not what I'm looking for. I think euro is going to come back into play right now. 190. Here we go. Yeah, so they know what they're doing with the euro. Bitcoin's not really doing anything. I'm not seeing anything. Come on, give me something. Say something. No one's posting anything. Here we go. Let's just quickly go and have a look at the markets, how they're reacting to it. Headlines, headlines. Give me headlines. Nothing yet. Nothing yet. Euro spiking up, spiking back. Will slow QT. Yep. Okay. That's good news for us. We know that. Dollar's coming back down. Sharp recovery. NASDAQ is holding out. That could be just about a volatility that we've been looking for, guys. In volatility index, where you at? Sharply coming down. That's good news for us. If the VIX is down, everything in principle should be going up. How's NVIDIA doing? Not really doing too much of a move. Quickly going over to dollar yen. Dollar yen's coming down. That's good news for us. USDCAD, that's looking like to pull back as well. Just quickly going over to the euro. Nice little stop reversal there, coming back up. XRP claiming a little bit more. Bitcoin right there at 188. Not really doing anything. Okay, false move higher. Dumping coming. Probably. It all depends. Anything else? No changes confirmed. I'm waiting to see if they've got actually anything happening here. They usually put out, here we go, economic projections statement. Okay, then. So let's just have a look at the economic projections. In conjunction with the meeting, held market participants submitted their project. Here we go. Forecasts of shows of 50 basis point rate cuts in 2025 to 3.9%. That is huge. That is huge. Okay, then. So if they're going to be cutting the rates, wow, that is very, very good. I like this guy, Walter Bloomberg. He comes out with the flavor. Let me just refresh it again if he's not saying anything else. Okay, so 50 basis points, 3.9%. That is going to be wonderful. That is pretty much a license to print, in my opinion, ladies and gentlemen. Bitcoin not really doing anything. Euro still climbing up. NASDAQ trying to come back up into these several imbalance zones right there. We've got quite a few imbalance points on the NASDAQ that we need to take into consideration. I don't think the market has reacted the way I would really want it to react. because then it's telling me they're waiting for the press conference, and the press Euro's doing wonderful right now. So yeah, an assistant. Okay, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on treasury securities from 25 billion to 5 billion. Well, listen, logic says that when you see the yields going down, that's good news for the stock market. Okay, so you want yields down and then you want everything else to go up. Okay, remember that. And as long as the bonds come up as well and you correlate that to the stock market, you know that risk is on. High risk and low risk. How long for? Different story. So if you capitalize on that, just make sure you're taking profits along the way. Okay? Euro panic closing shorts. Yes, Euro is taking a little bit of a reversal, which is decent for Euro. But when you look at the Euro itself, if Euro can get to that significant 1.100 region where you've got some nice little claim up here, that's where I think Euro will make a reversal around the 1.1, maybe the 1.11. But it's doing very well right now to sustain these ranges at the upside on the back of the weakness of the dollar itself. Okay, so nice test of the psychological range right there. Look at that, man. Guys, listen, if you just studied how price moves around these psychological ranges, and that's information that you get in the free course, and of course, there's information about that in the Platinum membership as well, and you do get more information on that with the Platinum membership, you will learn to understand that these areas here are so important. Okay, they are. It's the first high and the first low that's formed at the start of every trading week. So just realistically do that free course, and then you want to expand on your understanding of the hybrid. Get to tradersreality.com where you can take advantage of the Platinum membership, and you'll learn so much more about the importance of these ranges right here. They set the tone for the whole week. Okay, so just take that into consideration. Now, Bitcoin, not really doing anything. Euro has moved up, but it's now Bitcoin's pulling back. I think what they're doing is they're just going to try and fill some bids because, look, a lot of bids have come into Bitcoin right now. A lot of bids have just come in and opened price, but then at the same time, offers have come into action as well. So we've got quite, look at that. What was that? Is that 70 million? No, 30 million offers on 86,788. When you look at this chart, the expectation is that price is going to go higher. Okay, that's the thing. Okay, but it's again, what is Powell going to be suggesting? They're holding the rates, but 50 basis point cut, that is wonderful for them. So we're going to wait and see. Oh my God, Bitcoin, look at that. It's actually going crazy right now. You saw that 300M. Yeah, he shorted. Okay, gold, baby. Where's gold? What's gold doing? There you go. Gold could claim its all-time high again. Gold could actually do it. And we ain't even got the press conference just yet. It's like Bitcoin is being violated. Tino, well, yeah, I'm aware of the whale. Yes. Tino, how will the market react to only 2 cuts? They're kind of reacting to it right now. Okay. The 50 basis points puts it to 3.9%. So that logically means that the yield is now coming down on the dollar. So what does that mean? Well, it means I need to go elsewhere and start looking for yield. Where else could you go? Euro, which explains why Euro is making a little bit of a reversal back up, and then you've got the dollar pulling back down again. But again, we need to make sure that the dollar sustains this rally down. We want it to go down, and then everything will then go back into play and go back up again. Because dollar's been going down, but Bitcoin hasn't been going up. So something fishy is happening with the Viva la Bitcoin, okay? So red vector candle, remember, if this is before the press conference, they could actually come back into these vector candles at some point. So just take that into consideration. What else have we got? Bitcoin with cheese. Any questions, guys? Because we're going to be going into the press conference very, very shortly. Rates unchanged. Yep, the rates have been they're staying the same. The rates are staying the same. Let me just refresh this to see if Walter's put out any more information. Okay, then, so Powell finally found the stag and the inflation. Okay, so Fed cuts GDP forecast from 2.1% to 1.7%, and the Fed raises their year-end core PCE forecast from 2.5 to 2.8. That's not really good. Fed raises their year-end unemployment forecast from 4.3 to 4.4. Okay, so if they expect that the employment rate is going to go up, that's going to then justify the 3.9% target that they're looking to get to in terms of the interest rates. Okay, 4 Fed officials expect no cuts, no 2025 cuts versus 1 in December. Oh, that's going to be interesting. No cuts in 2025, but they'll get one in December. So they could do one basis. I mean, he did say, look, medium forecast shows 50 basis point rate cuts in 2025. So we'll get one cut, and that could be that. It could be the one cut in December. So that's from now until December, the rates on the dollar are going to be higher. Okay. So that's going to then force investors to say, okay, let me take advantage of some flavor over here. Okay. So that's going to be an interesting thing. The infamous FOMC doji. There is a possibility of a rate cut and was priced in. I think it may fall back to 78, 80. Guys, where do you think Bitcoin is going to end up? Because Bitcoin, quite frankly, is not behaving the way it should. Okay. Dollar's been going down. Bitcoin should be going up, which means that if we are going to get into that big trajectory move from Bitcoin, today, realistically, should be the day that Bitcoin starts its move. Because the dollar's been going down and Bitcoin has been going down, but they've been buying the Bitcoin. Remember, look, they've been buying it up. They have been buying the Bitcoin, guys. Look at all this green stuff here. Since its all-time high, they've been buying it up, and they wait for this FOMC, and then bang, Bitcoin should be making its move. It really should. What do you think about the 50 EMA breakout with the green vector on Bitcoin? Which one would that be? On what time frame, my friend? Dump it to 0. Oh, come on, be optimistic. What about the altcoins? Okay, altcoins. Let's just go to USDT chart for a second. Remember that area that we were speaking about earlier on today? Yeah, just go watch the live stream from earlier on. You can see they've come back down into that range. USDT comes down. They've come back into a point where psychologically people will be like, I'm going to take some profits on Bitcoin. And that's where we are right now. So this move up, move down, we'll know exactly where we stand once Powell starts talking. Look, the resistance of Bitcoin on the daily time frame is clear as day. I mean, come on. All right. You want your bull market to start, Bitcoin has to get above the 50 EMA. Flat. It has to. That's when your bull market will probably resume its trend. But you've got 50 EMA resistances. It's clear as day that there is a problem at that zone. You've got this zone right here. You've got this zone right there. Okay? Go back and watch the live streams on, 21st of February. Look at what I was saying at that point. If you don't get 3 daily candles closing above the 50 EMA from this point, then you don't really have a market to be buying in. And if you did start buying at that point because you were like, nah, I don't believe it, well, then you'd be paying a nice premium right now. Well, you'd be at a loss in principle. Okay? Cool. Come on, man, pal. I can't wait to listen to this dude. Here we go. Green vector candle coming into play, gang. Let's get rid of this. Happy days right there. Whilst we're waiting for that, where are you guys all trading? Because you can actually trade this right now. Hold on a second. Yeah, NASDAQ is making a very nice move right there. Look at that. Nice flavor by the NASDAQ. Beautiful. We need to claim 20,000. You can actually trade that on BTCC, ladies and gentlemen. So if you ain't part of BTCC, get involved in BTCC because you can actually... You get a 10% deposit bonus on BTCC. So that's in the description of this live stream. And you don't need KYC or VPN to use BTCC. So it's good for anyone that is trading in the United States. But you do get a 10% bonus. And it's up to 100K. Maximum bonus of 10 grand. So 100K deposit. Happy days. And you can trade all tokenized stocks on BTCC. So you can exploit Bitcoin and NASDAQ and gold at the same time on BTCC. Just go to the tokenized stocks and commodities and you can trade them all right there. You can trade Microsoft, you can trade MicroStrategy. It's all on there on BTCC. So if you want that, go check out BTCC in the description of this live. Okay, come on, Bitcoin. Powell, going to be speaking in 20 minutes. Anything else, ladies and gentlemen? Went all in on gold 3 weeks ago and it's paying off. Happy days to you. Tino, if it makes a move up, doesn't it have to liquidate the longs first? It doesn't have to do anything, okay? So they just liquidated some longs in this area here, all right? So the stop run down, and then they're trying to make a little bit of reversal. What you've got to look at is this, guys. We've been stuck in this area on Bitcoin for quite some time, okay? Significant amount of time on Bitcoin inside of this zone. Ethereum started the party off today and made the move to the upside. Happy days, and she's coming back into the vectors. For us to assume that Ethereum is going to contain a continuous move to the upside, you've effectively got these 2 points of interest on Ethereum. You've got this one here at 2,316, and you've got this area here at 2,552. If they can reclaim all of this, you are improving the odds that there is going to be a sustained rally to the upside for Ethereum. Because remember, Ethereum hasn't taken no all-time high. It hasn't. It's just been dead. All right, worse than XRP. But then even then, XRP hasn't even claimed its all-time high, or hasn't it? Let's just have a look at XRP. No, it hasn't. Hold on. Quickly go. Quickly go back. Well, yes, it has. Forgive me. Yeah, so it's claimed its all-time high in this last rally that Bitcoin made its all-time high, but Ethereum hasn't. So it's... But XRP is formulating the XRP formation right now, guys. So don't buy XRP until it breaks out of any of these ranges. Short it when it breaks lower, buy it when it goes higher. That's the XRP formation right there, guys, because we had it before over here where it just didn't do anything for such a long time, and then it broke out at that point. So happy days for all the XRP holders, all right? Anyways, quickly go back into Bitcoin. We're going to be starting the live stream very, very shortly, ladies and gentlemen. Where's the likes, man? 800. That is embarrassing, man. Embarrassing. 800 people like the stream. Come on, bro. 3,700 of you are sat there waiting for this live. We're waiting for Powell to cough and stutter and do all of that madness. And only 822 of you are actually in agreement. Come on, let's get these likes up, man. It costs you nothing to do that, guys. Question. Tino, in a W or an M formation, is it a mandate that the second trace up or down needs to be within the first drop or rise? In this free course, you will learn about the patterns. You go over to it, and it breaks down the patterns themselves right here, okay? So to get that free course, go to tradersreality.com. Do this one. This is the patterns, all right? And when you've got that information about the patterns, it's going to break down the criteria of what you need to see. Conventional wisdom would say that if a W formation comes, you really want the second leg, which is this bit right here, to effectively be higher than the first one. Why? Because it means that the stop run that has happened here is coming in with less pressure. So that means market maker is just building more longs inside of this range, trapping traders in the belief that price is going to continue to the downside to effectively make the reversal back up. Remember, this play right here is psychological. It makes people think, oh my God, price is going to the downside, I go short. Remember, you don't buy when prices are rising, you buy when prices are dropping. Why do you think you got all this order, all these guys that are buying bid right now on Bitcoin? Because they're buying it as it's dropping, okay? With the intention that they're going to sell it later on at a higher price, okay? Cool. Mad Love Luxky, thank you very much for doing that. Thank you very much for doing that. Thank you so much for the likes, man. God, that was quick. You guys came through with that. Here we go, Bitcoin. This is my nice shirt, man. I don't want to wear anything fancy and looking fancy. It's all about Powell tonight, guys. It's all about Powell. If we can get to 3,000 likes, then we are laughing tonight. Basically, Fed will slow its QT process from April 1st. Liquidity is coming, bullish for Bitcoin. There you go. But we know that. But what we don't know is now's the time you want to update. No, thank you. What we don't know, sorry, is what the tariffs are going to do. So whatever you're seeing right now happening is investors coming to terms with the fact that, yes, okay, things are going to be looking good in the future in terms of access to money. But if Powell turns around and has a hawkish statement or is hawkish in his approach, we're going to have ourselves a bit of a problem. We are. We need to know that he's going to be, yep, we're going to be cutting the interest rate. So don't worry, you're going to get your flavor and we can start putting money to work again because we're going into another quarter, sorry. And that means earnings announcements are coming out. And who's going to start the party, ladies and gentlemen? JP Morgan. All the banks are going to be revealing where they're making their money. And we kind of get a feel that it's not on financial products. It's people's trading activity. Okay. So just take that into consideration. They will reveal that in their earnings announcements and they will reveal whether or not people are consuming credit. And we know credit is going down in the sense people aren't really consuming it. So that's why the Fed is getting pressure to cut rates. Okay. Tino is not Italian and I'm not from Sicily. I am Greek. So miss those days. Can you do me a favor and turn it off for 5 seconds? This guy, these were the old days, ladies and gentlemen, where it was just me and my voice just going all about these charts. But nah, we're here now. Okay. Anything else, ladies and gentlemen, because we're going to be starting that live stream very, very shortly. Powell is going to be talking and we're going to have Powell right here. And then we're going to have Bitcoin price over here. And we're going to be watching to see how price is going to behave during that time. Is it still on? Yeah, it's not coming up just yet. Of course, we'll be waiting for that. Anything else? Okay. I'm trying to pray together, man. I'm trying to. What do you think about Euro USD? All right, Euro. Listen, things are changing for the Euro right now in regards to the spending that is being done by Germany. Okay. And again, psychological levels, very important area that Euro has effectively reversed from. Now, if you just go to the 4-hour time frame on the Euro, you can see you're making a decent higher low, and it's come back down to the green vector candle recovery, and we've got a red vector candle recovery region right here. Once Powell is done with his conversation, Euro will probably resume its direction to the upside, because you've got to remember the dollar itself is still got its strength. You're still at an appreciation of 3.2%. That means 3.2% purchasing power. Okay. So logic says that the dollar still has a range of vectors to go back to where price had moved away aggressively, where people are transacted on the dollar itself. So if the dollar contains itself and keeps going lower, given that the tariffs are going to be putting pressure on the dollar, that's going to be good news for the euro. It's going to be good news for the yen, as long as they're not using the yen for a safe haven, given that you can see yen is starting to mark up right now, which is good news for us. And are the bonds going up on the yen? A little bit, okay, but not anything significant as well. Going into the 10-year yield on the yen, oh, God, 1.5%. But as long as, quite frankly, as long as the VIX is going down, 4% on the VIX, that's great news. Going into the vector candle recovery. NASDAQ itself up 1% for the day. That's brilliant news. Coming back into the red vector candle zone right there. Recovering this wick. I think if Powell does give us anything, then NASDAQ could effectively reclaim 20,000, and then it's off to the races where they will start selling the rallies, and that could effectively bring your NASDAQ back up a little bit. Okay, so we're going to wait and see how that plays. Tino, do you ever struggle with euphoria when you're making profits? How do you keep yourself calm when you are in a winning position? I always look for a reason to get out. You know, whenever I'm in a profitable position, I always look to try and get out not as soon as I can, but in line with my strategy. Because if I'm going to turn a scalp into a swing trade, price would have to move aggressively in my favor for that to be the case. But because I'm always instantly scalping, that means I'm instantly taking profits and taking losses. You kind of detach from a euphoric move. I mean, price would have to go so stupidly in my favor for me to be like, okay, wow. You know, at the end of a trading day, we could be at 15, 14, 20 grand in profit. And that's over a succession of trades. But if I open a trade in the first 5 minutes of opening it and it shoots up in my favor, I'll be like, wow, I've got to get out of it as soon as I can, you know. But it's one of those ones, you know, you can't really be feeling euphoric when you're trading. You can't feel like that, man, because then that just gets you into becoming complacent. And then you want to put down more size, and then you want to just play a bit more, and you think, oh, I've got the house money. Nah, it doesn't work like that, man. Do you think this morning's announcements of SEC dropping their appeal of Ripple case is affecting the whole crypto market, or just XRP? Seems like FOMC uncertainty is holding down the crypto or the XRP pump. Look, the SEC pulling back just gives XRP the accessibility for investors and companies to start getting involved with Ripple. That's all it is. So now what you're going to be seeing is you're going to be seeing companies putting out saying that they want to go into partnership with Ripple. They're going to do this with Ripple. And XRP is naturally just going to keep on pumping up as that information gets revealed. So I think out of all of the assets in crypto, XRP has to be the one that has been suppressed the most. But that is because of a court case. Okay. Has Bitcoin been suppressed? I think Bitcoin has been suppressed. It should have hit 100K a long time ago, but never mind. I will say the live stream, federal. Shut up, man. You know what? I haven't actually lifted anything. I injured my shoulder, so don't worry about it. I'll get back onto it. Is XRP the biggest scam? I wouldn't say it's the biggest scam. Where it's a violation if you've been holding it and it hasn't gone anywhere, you know? All right, we've got 8 minutes, ladies and gentlemen. Anything else? Because that's when the flavor is going to begin. I do any spot trading. I'm happy with 2 trades a week. Any tips, Mr. Tino? You've got it there, to be honest with you. As a spot trader, your goal is just to capitalize on 2 trades. If you're going to take only 2 trades as a spot trader, first thing that you want to do is you want to look at where price is in relation to the Asian session on Monday. A very important point. Why? Because the consensus says that if price moves away from the Asian session range on a Monday and trades away from it by Tuesday, the logic says that we're going to be trading away from that point for the rest of the week. As you can see, we've had FOMC and Bitcoin hasn't really done that well to move away from it. However, when you look at Bitcoin's price in relation to these lines right here, it's telling us that it's trying to move away from it. So we might have ourselves a very interesting Asian session this evening if we do get good news from Jerome. Okay. Oh, what a guy. Anything else? Tina, are the Fed members cutting interest rate expectations for the second quarter, the third quarter, fourth quarter, and next year? This is where we are with it. We just quickly refresh this. For anybody new that's passing through, welcome to Traders Reality. Like button and subscribe. This is the criteria for this live. It's the biggest live we do, and it's the lowest amount of likes, man. Where are the 3,000 likes? Come on, let's do it before Powell actually starts talking. Now, it says here, 4 Fed officials expect no cuts in 2025 versus 1 in December. Who are those 4 officials? Waller, he's the most pessimistic dude on earth. Okay, I thought I was bad as being a perma bear, but that guy is just different. Okay, going into it, we've got various forecasts for PCE, and they're raising the unemployment forecast to 4.4. I mean, look, they're giving us 3.9% on the interest rates. Will we go back to the time when it was literally 0.25%? Nope, I don't think so. Not with the amount of debt that's going around in the US. I mean, Trump would have to get a real big influx of people, influx of dollars going in with the tariffs. And the tariffs would have to be on for a long time to really get the debt down. So I'm going to wait and see. You just wish I could have this guy's energy. Take it, my friend. I cancelled my UEFA Championship subscription and do watch FOMC lives. Fair enough, my bro. That's fair enough. All right, Bitcoin not doing anything. We're not really expecting too much, but it will be starting in the next 5 minutes, guys. Next 5 minutes. Euro is starting to make a little bit of a flavor to the upside. Just quickly going into the ETH. Not really doing too much right there. Let's just remove that. Going to Solana. Solana. Okay. Do you know what? When I provide the trade setups, okay, for the platinum members, out of the 3, because I do Euro, NASDAQ, Bitcoin, Solana, Ethereum, and gold, okay? In my opinion, when Solana isn't doing anything stupid, Solana, in my opinion, is a clean asset to trade. It really is. It respects cycles. It respects everything. All right, Ethereum is being suppressed like no tomorrow, and then it burps, and then everything makes a move with Ethereum. But Solana, it respects the vectors. It always goes back to vector candles. I mean, look at it, just clean precision on the vectors right there. So if I had a choice to pick out of Bitcoin, Ethereum, and Solana, I would trade Solana lately. I would trade Solana. Bitcoin is always going to be Bitcoin, man, but you can see Bitcoin is very treacherous. But Bitcoin works great on the Brinks box. It really does work great. Okay. Tina. Tina, when will we see you asking questions to Powell? Trust me, I'm on it, man. I would love to ask Powell questions. Here we go, 4 minutes. I would love to ask Powell questions. What would I ask him? Actually, what questions would you want me to ask Powell? That's something I want to know. All right, we got 5 more minutes. No, 4 more minutes, ladies and gentlemen. Euro's just stalling at these highs. Dollar dominance quickly going into it. All right, now it's coming back down. We need dollar to go down, down. Green vector recovery. Dollar can break 2%, 2.8% on the actual chart as well. That'll be good news. Just looking at the currency strengths across the board, I am seeing dollar interest coming in, but I'm just looking at dollar yen. It's dollar yen. That's the one for me. Just have a look at dollar yen. Yeah, strong move on dollar yen. Nice rejection of the 150 zone. Keep breaking down and eat the liquidity down at 148. That will be wonderful for us. Euro will then say, yes, please, and get back up above 1.09. So, yeah, that's where we are with it all. Quickly, Bitcoin dominance, where we at? Here we go. Nice little climb to Bitcoin dominance, sticking to our levels. Look at that test, that 1661. I'm looking for Bitcoin dominance to really come back up, guys, like really come up. 63 is what I'm looking for with Bitcoin dominance. Anything activities? Here we go. 3 more minutes, guys, before we actually have the press conference. Man, I can't wait for that bad boy. I cannot wait for it. Nothing yet. Nothing yet. So Powell is good or bad? And then if he, when could possibly replace him. We don't want to replace Powell. Keep Powell where he is, man. Tina, when do you think we'll hit 76K for a camel toe formation? All right, then. Listen, don't get me laughing tonight, man, because I want to be serious when we're listening to Powell. All right? Camel toe formation, bruv. Like, come on. Say something else, man. It's even worse when I read it. How many times will he cough? I don't know, man. 63K is what I'm waiting for. Also, let's get this bread. All right, listen. You've got to be patient. You've got too many macro events that could be coming into play. What's going to happen with the war with Hamas, okay? Is it going to start escalating even more? Is there going to be an agreement between Russia and Zelensky and Ukraine, okay? What's Trump going to be doing in between that? What's he going to do with the trade tariffs? What's China going to do in retaliation? What's the Eurozone going to do in retaliation? We know Euro's trying to put tariffs on Kentucky Bourbon and Harley Davidsons that are being sold in the UK and in the Eurozone itself. So we know there's a back and forth with tariffs, but we ain't going to know until the actual tariffs get put into play. And people are putting that expectation in the chart with this liquidity right here. So just take that into consideration. Mad love to you, RTB, my bro. Mad love to you. Where the pattern watchers at? Where the pattern watchers at? Yields are getting smoked. Yeah, good. As long as the yields are getting smoked, that means that the NASDAQ and the S&P, well, they're not really doing anything right now. Okay, ladies and gentlemen, I think it's time to get this party started. Here we go. Here we go. Powell, start talking, my bro. Come on. Yes, I'm going to leave that. We're going to start getting involved in Powell. Here we go. Holy shoot. Here we are, ladies and gentlemen. Let's get this party started off. Bitcoin. We're going to put Bitcoin's price right here. And we're going to have Powell talking right now.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments.
Can we hear that?
Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor.
Here we go.
Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
Come on, Powell.
At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%.
We knew
Looking
that.
ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high.
This is good.
As we
wanna hear
parse the
this.
incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Will he look forward to the questions? Here we go.
Howard Schneider with Reuters. Thanks for your time. So, two things on sort of the real side here, inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
Colby. Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor inflation expectations very, very carefully, basically every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this. You do see increases widely in short-term inflation expectations, and people who fill out surveys and answer questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys, but if you look out 5 years or the five-year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer-term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration, and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation most recently has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will. But given where we are, we think our policy's in a good place to react to what comes, and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
You already know what it's doing, bro.
Nick Timmeros, The Wall Street Journal.
There we go.
Chair Powell, Chair Greenspan once defined price stability as an environment in which inflation is so low and stable over time that it doesn't materially enter into the decisions of households and firms.
Can you say that today, that we have that price stability, that households and businesses are ignoring price growth? When you see buy in advance psychology, big changes in inventories, and surveys that show consumers, at least in the short run, expect higher inflation.
So I do like that definition a lot. In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation. We know inflation will bounce around. That is price stability. I think we were getting closer and closer to that.
What the hell?
I wouldn't say we were at that. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP for 2025?
So again, people wrote down 2 cuts the last time, and they look at the they wrote down meaningful decline in growth from 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3. And so those kind of balance each other out. So people, not everybody, but on balance, people wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean,
that's why we're listening
it's
to
really
you.
hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
Just stop it, man. Just concentrate. Yes, I went blue, man. I turned into a blue vector.
Mr. Chairman, Edward Lawrence of Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting relatively high productivity. We've got unemployment pretty close to its natural level. But the hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs, so you're not seeing people losing their jobs, but you're seeing that people who don't have a job having to wait longer and longer. And the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation, too. So overall, it's a labor market that's in balance, and, we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other?
In labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are, they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area, but at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs, and prices went up. But prices also went up on dryers, which were not tariffed. So the manufacturers they just kind of followed the crowd and raised it. So things happen very indirectly. And so there'll be a lot of work done in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
A roundabout question.
Craig Torres from Bloomberg News.
Bloomberg, here we go.
Thanks, Chair Powell. You said transitory price increases from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
When you say last time, are you talking about the last?
Pandemic, yes, during the
Because
pandemic.
you could have been talking about the last time there were tariffs, in which case the inflation was transitory.
Right, chill out, Powell, man.
Of course, we're well aware of that. And
guy.
it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. We haven't had real price stability fully reestablished yet, and we have to keep that in mind. And we hear that people are very reluctant to take on to allow prices to go up. At the same time, we hear that businesses are intending to pass many of these prices through. So it's hard to say how this is going to work out.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
So we have two goals, right? We have maximum employment and price stability, and we have to balance those. And there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal. And then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say, we don't have that situation right now. That's not where the economy is at all.
NASDAQ
It's
pumping.
also not where the forecast is. I don't know any mainstream forecasts that really show significant problems like that.
Well, just to follow up, yesterday, the UCLA Anderson forecast said there's a high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
There's always an unconditional possibility of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, it could be within 12 months a 1 in 4 chance of a recession. So the question is whether this current situation, those possibilities are elevated. I will say this. We don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels, still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
Wow.
Chris.
Go on, Bitcoin.
Hi, thank you. Chris Rugaber at Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer that question in this very room some time ago, and I have no desire to change that answer and have nothing new for you on that today.
You ain't leaving, bro.
Well, maybe I'll have another mulligan. As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing. We look at it, we don't dismiss data that we don't like, we force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation expectations. So we got to keep that in mind. And I would just say we look at all of them, and that one's kind of an outlier, but nonetheless we take notice of it.
Thank you.
Michael McKee from Bloomberg Radio and Television. There's a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can spot a problem early enough unless you decide to be preemptive?
Yeah, look, we're aware of we're well aware of how things are going to evolve and the time frames and all that, and we will use our tools to foster achievement of our goals to the best we can, and of course we're going to try to be timely with that. For right now, the hard data are pretty solid. We are obviously aware of the soft sentiment data and high uncertainty, and we're watching that carefully, and we think it's a good time for us to wait for further clarity before we consider adjusting our policy stance.
Do you think it's going to be hard to get clarity in a government by tweet? I mean, do you have a feeling that at some point you actually will have a forecast you can trust?
Yes, I think we will. It's hard to say when that will be. These decisions are going to be made, and they're going to be implemented, and then we'll know. At that point, we'll know what the decisions are, and we'll have to make assessments then about the implications for the economy. Those things will happen. A lot of them will happen over the course of, in coming months, certainly over the course of this year. and we'll be adapting as we go.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation. Can you walk us through what that looked like over the last couple of months, if there were specifics from the January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain and that you're reading about developments. The news is full of developments of tariffs being put on and taken off and things like that. Some of that is noise in the sense that it's not really telling you anything. You're trying to extract a signal from that, and the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those things. So that's really when we say signal and noise. Sorry, the second thing was?
Or similarly for tariff inflation, non-tariff inflation, ways that you're making the distinction.
That's sort of a special case of that. The idea being, and I do think that the first 2 months of this year are a great example. You've got high readings for goods inflation after a string of readings that average close to zero, and you have to ask, it's coming during tariffs, but you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent. Plus noise. There can be idiosyncratic readings in various categories, which will shortly reverse, and that happens too, and that could be a big piece of it. I think we'll know. In a couple of months, we'll know whether those were, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing. And we'll be doing that, and so will everybody else, and we'll all be trying very hard to make that assessment. And, I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what, in your mind, would make something cross from noise to a signal, what that threshold would look like?
It would depend on what we're talking about. I mean, obviously, you're looking for direct evidence that particular pieces of inflation are or are clearly not caused by tariffs. For example, if it's something that was, in the service sector that was far away from anything that's tariffed, you might think, okay, well, that is, like, frankly, housing services inflation, which, by the way, has been behaving well, which for some time was kind of a problem. Now it's
new hour
slow,
candle,
but
guys.
it's definitely, moving down in a very good way. It's more now with goods and to some extent with non-housing services inflation.
NASDAQ claimed that 20, I think. Yeah, claimed 20K.
Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and we completely understand and accept that.
And just to follow up, why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer? Does that mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth but higher inflation. And they kind of balance each other out. So you think, and unemployment is there's really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth and meaningfully higher inflation, which call for different responses, right? So they cancel each other out, and people just said, okay, I'm going to stay here. But the second factor is it's so highly uncertain. Is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And we get all that, and we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time, and that probably has to do with turmoil at the beginning of an administration that's making big changes in areas of policy, and that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, first of all, if you could clarify, you were talking about how tariffs were a good part of the uptick in the inflation forecast, and I was just wondering what that specifically refers to. Is that the tariffs that have already been put in place? Is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind, talking a little more about the balance sheet decision and what drove that. Did that have anything to do with expectations of how the debt ceiling, raising the debt ceiling, might affect the reserve supply?
Yeah, so in the SEP, you'll see that there's not further progress on core inflation this year. We're kind of flatlining, going sideways. We don't ask people to write down how much of this is from tariffs and how much of it is not. But some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already, all forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I think, I guess the way I'd say it is, it was the flows in and out of the TGA that got us thinking about it. But as we thought about it, we really came to the view that this was a good time to make the move that we made. And broadly, committee that came around to the view that we would do the same thing we'd already done, which is I guess in June, was it June, whenever it was, we lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is, if you're cutting the pace of QT roughly in half, then the runway is probably doubled. Okay, so it's going to be slower for longer. And people really like that. People thought that's a good idea. It's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and by the way, we still think that reserves are abundant, although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. And of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very successful rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were somewhat above the level we judge as ample. And clearly we're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
NASDAQ is moving, man.
Claire Jones, Financial Times. You said in January, Chair Powell, that inflation expectations remained well anchored. Would you still say they remain well anchored today? And just to reiterate the question others have asked, if they're not so well anchored, why hasn't there been a more radical shift to the policy path today? Thank you.
So when we talk about inflation expectations being well anchored, we're talking about longer run inflation expectations. and they really haven't moved much. I mean, if at all. There's one reading that everyone's focusing on that it's higher, but the other survey readings and the market-based readings all show relatively, well-anchored inflation expectations. You would expect that expectations of inflation over the course of a year would move around because conditions change, and in this case, we have tariffs coming in. We don't know how big, what's speed. There's so many things we don't know, but we kind of know there are going to be tariffs, and they tend to bring growth down. They tend to bring inflation up in the first instance. So I would say, I'm not dismissing what we're seeing in short-term inflation expectations. We, as I mentioned, follow that very carefully. But when we say expectations are well anchored, we're really looking at longer terms, 5-year and out, and there's really no story to tell 5 years and out, either in market-based or in surveys. But we'll watch it. I mean, we're not we're not going to miss any evidence that longer term or medium term inflation expectations are moving.
NASDAQ up, Euro up. There's just green across the board.
Hi, Chair Powell. Neil Irwin with Axios. Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government-adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying private job growth, and do you see the composition of job growth as something that has policy implications?
So that has been the case. We talked about that over the course of the last year. There were some good number of months and times when a lot of the job creation was concentrated in, educational institutions, healthcare, state governments, things like that. There were also times when private sector job growth has been moving in a healthy range. I mean, they're all jobs, but and remember, we're
there's
we're
big
at very
volume
low
in this area, guys, on
unemployment
Bitcoin.
for quite a time now. So I think it's a good labor market, but it's something that we monitor carefully. From our standpoint, employment is employment. But the elected government is entitled to have, we don't have policies that address different kinds of employment, but the elected government has a different role, and they can have those.
NASDAQ QT question: does the committee envision at some point tapering the MBS runoff as well?
I think tapering it. I don't know. There's no plan to do that. At a certain point, we'll stop runoff. And we may or may not stop MBS runoff, though, because we want to stop runoff in net at some point. We haven't made any decisions about that. We want the MBS to roll off our balance sheet. We really strongly desire that. So, but we haven't made any decisions about that. I think we'd look carefully at letting that keep going, but hold the overall size of the balance sheet in constant at some point, a point that we're not out yet.
Powell's been good to us today.
Simon Rabinovich with The Economist. Thank you, Chair Powell. Several times today you've said that you feel you're well positioned to wait for greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales, plunge in confidence surveys. Today, not only did the S&P mark down the growth outlook, 17 of 19 see risks to the downside. So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at we're at a place where we can cut, or we can hold what is clearly a restrictive stance of policy, and that's what I mean. I think that's well positioned. Forecasting right now, forecasting is always very, very hard, and in the current situation, I just think uncertainty is remarkably high.
And sorry, standing here today, would you be surprised to pivot back towards rate cuts in May?
I think we're not going to be in any hurry to move, and as I mentioned, I think we're well positioned to wait for further clarity, and not in any hurry.
Matt Egan with CNN. Thank you, Chair Powell. The Fed statement released today removed a line that previously said the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. Can you explain the decision to remove that line? does it mean that you're now more concerned about inflation or about employment?
Actually, it does not mean either of those things. You know, sometimes with language, it lives its useful life, and then we take it off, and that was the case here. There's really not meant to be any signal here. Over the past year, you know, conveying the sense of the balance of risks was important, that they be in balance or close to being in balance.
All right, chat's
that was
getting
useful
spammed, guys,
as we
be
approached
careful.
liftoff, if you remember. But we're past that. Or sorry, no, beginning to cut. So we just took it out. I actually would say that the more important thing now about risks, and this is in the pages like 10, 11, 12 of the SEP, if you look, participants widely raised their estimate of the risks to our uncertainty, but also of the risks to growth and our employment and inflation mandates. That's a more salient point now than whether they're in balance.
Just on the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, you know, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect economic activity. So that's what we're looking for. I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. You know, the real economy, the hard data, are still in reasonably good shape. It's the soft data, it's the surveys that are showing, you know, significant concerns, downside risks, and those kind of things. We don't dismiss that. We're watching it carefully, but, you know, we don't want to get ahead of that. You know, we want to focus on the hard data. If that's going to affect the hard data, we should know it very quickly, and of course we'll understand that. But you don't see that yet.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s. Is the Fed willing to have a recession if it means breaking the back of inflation?
Well, fortunately, we're in a situation where we have seen inflation move down from, you know, higher levels to pretty close to 2%. While the unemployment rate has remained very consistent with full employment, 4.1%. So we now have inflation coming in from an exogenous source, but the underlying inflationary picture before that was, you know, basically 2.5% inflation, I would say, and 2% growth and 4% unemployment. So that's what we did. That's what together the economy accomplished. So I don't see any reason to think that we're looking at a replay of the 70s or anything like that. You know, inflation, underlying inflation is you know, still running in the 2s with probably a little bit of a pickup associated with tariffs. So I don't think we're facing, I wouldn't say we're in a situation that's remotely comparable to that.
And last month, the idea of a Doge dividend was proposed, which would send $5,000 checks to every taxpayer from Doge savings. President Trump and Elon Musk have supported this. There's reports there could be a bill introduced on Capitol Hill. What impact might that have on household savings and spending in terms of your growth and outlook for inflation?
You know, it's not appropriate for me to speculate on political ideas or fiscal policy for that matter. So I'm gonna pass on that one. Thank you.
Yeah, cheers, bro.
Daniel.
Hi, Chair Powell. Daniel Avis from Agence France Presse. You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April the 2nd coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those. And so that's kind of baked into the numbers. What happens it will be complicated, and there will be some retaliation and some not, and all that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain, but better informed forecasts. So yes, that's in there.
Last question goes to Jean.
Last question. Okay. Coming to an end, guys.
Jean Young with MNI Market News. Had a couple questions on the balance sheet change that you made. So the minutes had initially described your discussion on slowing QT as temporary until the debt ceiling is resolved. But from what you said earlier, it doesn't sound like there's a desire to kind of regain the pace of QT that we have at the moment after the debt ceiling is resolved. Is that the case?
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move. It slows down the path and probably lengthens it, doubles it effectively by slowing by half. That people thought that's a good place to be. It'll help us assure that this path is a smooth one as we get closer and closer to that. So that's how that came about.
Well, I guess my question is more, was that meant to be a temporary measure during the debt ceiling episode, or?
It was the TGA flows, Treasury General Account flows, that got us thinking about this. But the more we thought about it, we came around to this. And it is, yes, it was provoked. The original discussion was provoked by that. But I think what we came up with, though, was broader than that and different than that. It does address that issue, but it really is also, it fits in really nicely with our principles and our plans and the things we've done before and the things we said we would do. So that's why, pretty strong support. I just say it's nothing to do with monetary policy, nothing to do with the size of the balance sheet. It's just kind of a common sense adjustment as you get closer and closer. Let's slow down a little bit again, and that way we'll be more and more confident that we're getting where we need to get. You can take our time getting there. We're shrinking the balance sheet every month, and we think it was a good play, and as I mentioned, well supported. Thanks very much.
Happy days, ladies and gentlemen. So, the possibility of a recession, yeah? I mean, just looking at it across the board, you can see that Bitcoin has responded really well to this whole story. The NASDAQ itself has done very, very well. Recovery of the vectors, clearing the 20K zone itself. Oil's made a bit of a move up. Gold has just said go F and off you go, and breaking out to the upside. So now that the FOMC is done, just looking at what they're saying across the board with regards to this, we want focus on hard data. Tariffs tend to bring growth down and inflation up again. So that's the thing. You think inflation is related to printing money, and they even just said that they're going to stop QT or slow it down. So basically, you got interest rates higher for longer. So just quickly going over into other assets. Euro doing great. It's coming back up ever so slightly from that range. Full vector candle recovery, trying to make a little bit of a bounce. I'm looking at it on the futures markets. Got a little bit of an imbalance here, right there. NASDAQ is recovering back from that high. But nonetheless, guys, it's been a decent day for Bitcoin, clearing out the Asian session range, clearing out the previous high, going back into vector recovery. So you could assume that there could be movement towards the 800 EMA, but it all depends on how price is going to behave going into the Asian session. Now, with that being said, ladies and gentlemen, it has been fun. Remember, if you are new, be sure to like and subscribe on the way out, and any information on the hybrid system and anything that we've mentioned tonight regarding BTCC or the hybrid system itself, just get over to tradersreality.com. Everything you need is in the description of this live stream. Mad love and respect. And I'll be tuning into you all tomorrow for the unemployment claims.